Okay, good afternoon, everybody. I want to welcome all of our clients and friends of the firm to our third installment of our webinars regarding the PPP program. My name is Dean Martin. I'm a partner here at Kushner LeGrace, and we're happy that you could join us. As you are probably aware, Congress passed an amendment to the PPP program last week. It's called the PPP Flexibility Act, and that's going to be the majority of what we discuss today. This is going to be the biggest change to the PPP program, since it was initially passed and guidance was issued. So this is a major shift in the program, a lot of applicant-friendly things in there. So it's going to be a lot of good news today that we talk about. And we expect more guidance to be issued here. Just like before, the first step is to pass a bill, and then after that, we'll follow up with guidance from the SBA. We'll have to monitor that. That being said, we know that at least for the people who initially got funded early on, original 8-week period is going to be expiring in the next 1 to 2 weeks. So we thought it best to get you this information as soon as we can. That way you have some time to digest it, look at your current plan, and decide whether or not you need to alter anything. Don't feel like you're alone in this. We're actively working with clients. This isn't the only forum that we're providing guidance. We're constantly consulting with clients about any questions they may have, checking internal calculations that clients are doing, reviewing documents that they're going to submit with their applications, or even performing calculations themselves. So this is a good place to start, and we're happy to assist you with any further guidance that you need. Again, don't feel like this is it, and then after this, you're on your own. So we're happy to go over any questions or issues that you have. So just an overview of what we're going to speak about today. I'm going to start the discussion first with some comments on one of the interim final rules that had come out a few days after our last seminar, and this governs loan forgiveness. This is going to be the first of the regulations to be issued. There will certainly be more now that we do have a change in the program. So we're going to mention just a few comments on that. Then we're going to get into an overview of the PPP Flexibility Act itself. I'm going to talk about what changed and some things that we still need clarification on. After that, we're going to get into an update of our best practices, that we've provided at the end of our first 2 seminars. We're going to update that briefly. Then we're going to get into some illustrations on FTE calculations and the safe harbors. Not much of this is new information. However, given the changes of the Flexibility Act, we now see this as the most important thing to be reviewed in order to help maximize the forgiveness under the PPP. So we want to make sure that everyone has a good grasp of how to do an FTE calculation and then how the safe harbors work and what you need to look at when you're looking at FTEs for your business. After that, we'll get into some Q&A. I know many of you submitted some questions prior to our seminar. We reviewed all those questions. I'm going to answer those first, and then we'll also, if we have time left, get into questions submitted during the seminar. If we don't get to your question, again, please feel free to email us, and I will get back to you probably today, but certainly by tomorrow. So that's what we have to go over today, and I'll go ahead and get started now. So the first item is the interim final rule, the first interim final rule governing loan forgiveness. This was issued on May, and just a few points. Like I said, we know we're gonna have some follow-up regulations issued on this, but we do have a few items of note. The first two are answers to a few of the items we mentioned that were uncertain in our last seminar. So the first one is that SBA has clarified that they will count 100% of bonuses and or hazard pay paid during the forgiveness period in its calculation. You won't need to prorate anything if it's an annual bonus, even though it's a bonus for the whole year. 100% of it will count in your forgiveness calculation. The second item is in regards to how you figure out compensation for retirement and health insurance for owners of businesses. And we alluded to this in our second seminar, and the regulations did confirm it, that the way the SBA is going to treat these payments are going to be different depending on the legal structure of the business. So first, if you are a corporation and your owner is also an employee of that corporation, you will count owner retirement and health insurance in your calculation, just like pretty much you do for all your other employees. However, if you are self-employed or a partnership, the SBA and its guidance is going to not include these payments in its calculation. So that's a change from how you probably initially submitted your application. I'm not quite sure of why they are treating owners of these entities differently, but that's what they have at least proposed to do in their regulations. So that's an answer that we have. Third point, and this was new, they hadn't really alluded to it previously, but when we get into compensation for owners, some business owners have multiple businesses. They may get paid or take compensation from multiple businesses. Then they may have multiple PPP loans. But as far as the owner's compensation for the cap, remember it was 8 weeks worth of 100K prorated over that 8-week period. You're only going to account that once for each owner. And if an owner has multiple businesses, they're not going to allow that cap for one individual on multiple PPP applications. Now, that's different than an employee. If it's a true employee, they could be counted in different applications. But for the owners, you've only got the 100K cap once. The next item is not entirely new. I just wanted to point out the last item here. And this is for your offers to rehire. It's great that you can count those as your, and not reduce your FTEs if you make an offer and it's rejected by the employee because, they've moved on or they don't want to come back. You're not going to get penalized for that as long as you make sure you have the 5 things here. Number 1 is you make a good faith offer within the covered period. It's written. You keep documentation of it, as well as the employee's rejection of that offer. And you have to offer them at the same salary, wages, and number of hours as they were earning before. But I wanted to mention this last piece, and this is the new part, and that is the SBA is also requiring you to notify the state unemployment insurance office of that rejected offer within 30 days of the rejection. So again, that's new, and there's a footnote saying that they will further provide information on what exactly you need to do to satisfy that requirement. I would look for that to come out in probably the SBA's next round of either FAQs or regulations. So I wanted to point that out. And then finally, the last point here is there is a little bit of conflicting information about one of these FTE calcs, and it's whether you round to the nearest 10th or 100th. Probably going to be pretty minor, but I just wanted to point that out, and I'll mention it as we get into our FTE illustration as well. So that is the items of note that we had from that first interim final ruling. It's included in your materials. It's Exhibit A if you want to read it in its entirety, and it starts on page 10. So that's first interim final ruling. And now let's get into the meat of what we want to talk about, and that is the changes brought about by the Flexibility Act. So on page 3, what you have here is we have a little chart that kind of shows you the things that were changed in the Act, what they were before, and then what they are post passage of the Act. This Act is not very large. It's not like the CARES Act, which was hundreds of pages. You have a copy of the Act here in Exhibit B, and it's really about 3 pages in entirety. So this is everything that was included in the Act. The first item is the term of the PPP loans if they're unforgiven. So before, we were looking at a 2-year term, and the Act changed that to a minimum of 5 years. Now, I don't want you to think that, well, I now have 5 years. Note this item at the very bottom of the page. This change only applies automatically to PPP loans that originate after passage of the Act. However, you do have the ability to now go to your bank and get those terms amended to be increased from 2 to 5 years. However, that's something you have to work with your bank on. Also, see the second point here, the covered period has been increased from June 30 to December 31. There was some speculation after passage of the bill that this now meant that you could submit applications after June 30th and have up to December 31. But SBA has clarified that they're still using the June 30th cutoff date to have your application submitted. So wanted to mention that as well, because that may be different than what you heard right after passage of the bill. The third point, and this is one of the major changes, is the forgiveness period. Initially, we had an 8-week forgiveness period. That's now been extended to 24 weeks or through December 31, if that would be shorter than the 24-week period. So there's a large extension here for businesses that haven't been able to expend all their PPP funds yet. You do still have the option to use the 8-week period, though, if that would work better for you. And we'll get into why that may be the better option for you. But you do have now an extension on the time to spend the PPP funds. Also, on the safe harbors, and these are the safe harbors to, restore your FTE count or restore compensation for people who had their compensation reduced. That has also been extended from June 30th to now December 31. The thing to mention here is that you have up to this deadline to do that. So if you restore prior to the deadline, then you've met the safe harbor. Also want to mention too, if you do elect for the 8-week period, like we discussed in a previous point, all the other changes still apply. So even if you do choose the 8-week period, you still have until December 31 to establish the applicability of the safe harbor. Another item, and this is totally new, it's not a change of anything in the original bill, it's an addition to the additional bill. They've almost created a second safe harbor for the FTE calculation. So, and this is largely brought about due to lobbying efforts by the hospitality industry and other industries that were severely impacted by the COVID-19 mitigation, procedures passed by the government. These are businesses that, would have loved to open up and continue to employ all their people, but it was just not possible because they were shut down or or, drastically had to reduce their business. So if by December 31, you can document that the conditions lasted through the end of the year, that you are unable to rehire individuals who were your employees or similarly qualified individuals, or that your business did not return to the same level of business that you had on February 15th prior to the end of the year, due to regulations from the CDC or OSHA, for social distancing, then you're not going to reduce your forgiveness for the FTE calculation. We expect that the SBA and the Department of Treasury will expand on exactly what these 2 points mean. They're fairly vague, so I'm sure that in the FAQs or regulations to come out, they will, go into more detail on what exactly you have to certify and document as far as meeting one of these 2 factors. Another change that was implemented, and this is on the other costs. So remember before in our second webinar, we talked about the 75-25 rule, that it was an SBA change. It wasn't in the bill. A lot of congressmen did not like that it was included because they didn't include it in their original bill. And that was pretty much saying that your payroll costs have to be at least 75% of your forgiveness. Your other costs, rent, utilities, mortgage, stuff like that, couldn't exceed 25%. In the new bill that was passed, Congress then put this into the law to change that percentage to 60%. And in the original bill that came out, a lot of people that read it, including myself, read the actual language of the bill and saw that, this was a big shift in that they changed it so that no forgiveness at all would be allowed if you didn't hit that 60% mark, which was different than what we were working with before, which would only limit a portion of your forgiveness if you didn't hit it. A lot of congressmen came out and said, well, that's not what we intended. And we were really worried that some people would get caught up and having their forgiveness be zero now because of this. Some good news issued by the Department of Treasury yesterday. It's included in your Exhibit D right here. They've come out and said, they're still going to have partial forgiveness for this, even if you don't hit the 60% mark. So that's very good for anyone who, first of all, was being limited by the 75-25 rule, that now you have a little bit more leeway. You can go up to 40% on your other costs, and you will still get forgiveness. It looks like when the final details are issued, it's probably going to work similarly to the 75-25 calculation, except that now we can substitute 60% instead of 75. So very good news there. Another item that was brought about, and a lot of people, small businesses at least, that are participating in the PPP, weren't taking advantage of this next provision because in the CARES Act, it limited its application and, did not allow PPP applicants that get forgiveness to participate. And that is an option to defer depositing your employer Social Security taxes. This is the employer side, not the employees, but this is the 6.2% match on your employees' Social Security taxes. You now have the option to defer depositing those through the end of this year. And if you choose to do that, half of what you defer will be due at the end of next year in 2021, and the other half will be due at the end of 2022. So this is pretty much an interest-free loan from the government. The IRS did clarify that there will be no interest and penalties due. on this money if you defer it and then pay it in according to the schedule. If it's something that you choose to do, though, certainly make sure you set this up on your balance sheet as a liability, because you definitely would want to make sure you timely deposit those, at the end of 2021 and 2022, because otherwise you could be looking at some pretty stiff penalties and interest. So I'm not sure how many people are going to want to take advantage of this now, but the good news that it is an option that's on the table if you want to avail yourself of it. Finally, the last point we have to mention, the last change in the bill has to do with when the payments would be due on the loan for PPPs if they're not forgiven. And in the initial CARES Act, you did not have to repay any principal or interest on a PPP loan, and your deferral period was 6 months to a year. In the Flexibility Act, that's been changed now, and you now do not make any payments until you submit your forgiveness application and the forgiveness amount is determined. So if you submit a forgiveness application and receive 100% forgiveness, you never have a payment due. What they've also done, and we were looking for this, it was a common question, is we've got a deadline now on when your application is due. So you have up to 10 months after the last day of your forgiveness period to submit your application. So the timeline is going to be your forgiveness period, your covered period ends, then you have up to 10 months to submit your application. After you submit it, the bank has 60 days to make a determination on what will be forgiven. And it's not until that point that you would owe any kind of payments on an unforgiven portion of the loan. So those are the changes that we have. You'll see a note right here that these provisions are subject to future interpretations and regulations to be issued by the Department of Treasury. We expect that they will be forthcoming. So we want to, make sure we monitor that, because the SBA does have some leeway on how they administer these provisions. Now, the next thing we want to talk about on the Flexibility Act, we've updated some of our uncertain issues, for the program. And we're going to start out with the new ones. I've got some of the old ones that we previously talked about here. I'm not going to get into all of these old ones in detail since we've already spoken about them. So I really want to focus on the new stuff. And the first one I want to talk about is this forgiveness period. So we toggle back. We had 8 weeks. Now we have 24 or through the end of the year, but we can still use the 8. And for some people, the 8 weeks may end up being the better option. And that's going to be for people who have either spent all of their PPP funds or the vast majority of those funds. And, they may have to make cuts or reduce hours after the PPP loan is expended. So the 24-week option may not be good for them, because you have the ability to spend the money through the 24 weeks. However, you also have to do your FTE calculation through that 24-week period. So if you have to reduce your FTEs, it could harm your forgiveness. What I would like to see, and why I have it listed here, is the ability for an applicant to have a forgiveness period that's in between the 8 to 24 week options, and have that go out for as long as the PPP funds are available. So if you expend your funds at the end of 12 weeks, I would like to see you be able to cut off your forgiveness period then. We don't have that in the bill right now. It was not mentioned in the Department of Treasury SBA joint statement from yesterday. So as of right now, I would say you have to look at it as your period is either 8 or 24 weeks, and then hope for good news to come down the pipe. But that's what we have to work with right now. The second item we talked about, and this was mentioned yesterday in the statement, is whether or not the SBA would provide a solution to eliminate the very severe consequence of not meeting the 60% payroll rule. It looks like they will. They've said they will, and I would assume that it's going to mirror how they were applying the old 75-25 rule, but we need to wait and see how exactly they're going to do that. The third point, and this has to do with the compensation limit. So our compensation limit to any one individual, whether that be an employee or an owner, was $100,000 prorated over 8 weeks. And once you do the math on that, that came out to $15,385. So now the forgiveness period has been extended from 8 weeks to 24. So if we do that same math over a 24-week period, that now puts our compensation cap at $46,153. So the question is that same logic going to apply, or are we going to keep the same $15,385 limit to any one recipient, but just have a 24-week period to expend for other costs? It's not addressed in the bill. If you just looked at the strict substitution of the provisions, it looks like it would be. However, we really want to get that confirmed by the SBA before we can rely on it. So that's another item we'd like to see resolved in the near future. And I want to mention here too, like if you are a self-employed person, you just have a compensation to yourself and not really anything else, your initial loan would have been around $20,000 or so just in your compensation. So if this limit is increased to $46,000, that would pretty much mean all loans of that type are probably going to have 100% forgiveness. There's no guarantee that's the case. We need to monitor to see what the SBA is going to do here. Finally, the second thing the fourth item we'd like to see clarified is more detail on exactly what circumstances qualify under this exemption based on employee availability. This is a certification that you would have to do that you meet it, as well as providing documentation. So they certainly need to issue more details on exactly what factors someone should consider if they're evaluating whether or not they can make that certification. So those are the new items. After that, here we have all our old stuff. I'm not going to go through these point by point, but certainly refer back to them. These are items that aren't exactly clear. The only one point I do want to mention is one of the things you still see here is, will Congress provide a legislative fix as far as the issue on expenses being non-deductible if you get forgiveness? And one thing I can tell you is that was definitely not included in the Payroll Protection Act. Maybe it'll be included in future legislation, but as of right now, it's still, an issue where the IRS has the position that these are non-deductible, and we would like to get some relief on that from Congress, but we don't have it yet. So we'll have to monitor the future for that, but unfortunately, no good news to report in that area. So those are our comments on the Flexibility Act. We're going to update, our previous best practices sheet that we went over on our second seminar. So this is pretty much the same sheet as before. However, you can see the changes are in red. So on the FTE safe harbors, the same rules apply. However, we've now substituted December 31 for what we're using as June 30th. And if you don't meet this safe harbor and your forgiveness is being impacted by FTEs, you now have that other exemption based off of employee availability to consider if you don't meet the safe harbor. So that's something new. That's in italics right here, the one sentence in red. We've added 2 more items. Number 6 is to consider whether an 8-week or 24-week forgiveness period is going to be more beneficial. If you haven't used all your PPP funds yet and you have the ability to maintain your FTE count through the 24 weeks, then chances are the 24-week option is going to be better for you. If you've already expended most or all of your 8-week of your PPP funds over the 8 weeks and your FTE count is good for through the 8 weeks, then the 8 weeks may be the better option. The good news is that you don't have to make that decision now. Remember, you have 10 months after the expiration of your forgiveness period to get your application in. So even if you're going to use the 8-week period, you have up to 10 weeks after its expiration date. You don't have to select it right away. You could always wait and see what the next 16 weeks hold for you and still have plenty of time to submit your application. But if you're thinking that the 8 weeks is going to be better for you, you should probably continue with all the plans that you had before on how to maximize your forgiveness, except to substitute, the 60% for the 75% rule that we had previously, had to consider. And that leads us into the next item we had, number 7. This was going to be a much larger consideration prior to yesterday when the SBA issued its joint statement with the Department of Treasury. So the good news is now, if you fail the 60/40 test, you are still going to have forgiveness. It's just going to be partially reduced, most likely in the same manner that it was reduced for the 75/25 test. But it's still a good idea to run it to see, if your other costs would be limited by the 60/40 test, and then to think about what you can do to mitigate that. So that's the last item on here that is new. Everything else is pretty much the same recommendations that we had in our second webinar. So with the option to go for an additional 24 weeks, we see that spending the PPP money for most businesses is not going to be a problem. You were loaned 11 weeks of your payroll, and now you have up to 24 weeks of payroll plus your other costs that are eligible for forgiveness. So most businesses are going to be easily able to expend the funds. And the thing that now becomes the biggest factor you need to consider is this FTE count. So we want to walk through, how you calculate your FTEs and then what you do with those numbers once you have those calculated. If you're trying to see, if your forgiveness is going to be impacted by FTEs. So the first thing we're going to go over is how do you do an FTE calculation? And there are multiple instances and time frames where you have to calculate FTEs. Each time you do that, you pretty much want to follow the steps that we've outlined here. So the first thing you want to do in a calculation is define the period that you're calculating FTEs for. In this particular example, this is a 24-week forgiveness period. So first thing, what's my period? After that, you look at all of your employees and you figure the number of hours that they are paid during the defined period. I want to mention here, you only include employees. You do not include owner employees or business owners at all in this calculation. So only your employees. and you look at the number of hours that they were paid during the defined period. If someone was on salary, they're a salaried employee, and they continued to work their regular salary, then they're 40 hours a week. If they're an hourly employee, then it's whatever hours they were paid. After you do that, then you take the total hours they were paid during the period, you divide that by the number of weeks in the period to arrive at the average number of hours they were paid per week. That's step 3. Then step 4, you divide that number by 40 because SBA has issued guidance that they're going to use a base 40 when making these calculations. And that's going to arrive at a decimal, which we have listed, at the very right of step 4. That decimal is going to end up being, somewhere between 0, 1, or maybe a little bit over 1 if someone averaged over 40. Then in step 5, and you have 2 options for step 5. We'll go over the first one. This is the simplified option, and that is anyone who is 1 or greater gets an FTE of 1. Anyone who is less than 1 gets an FTE of 0.5. And if you use this simplified option, you just have to be consistent. So you can't switch between the simplified and the other. You have to use a consistent method each time you calculate an FTE. But option number 2 is a little bit more detailed, and it is similar to the first one as far as anyone who is a 1 or greater. They get assigned an FTE of 1. But anyone who is less than 1, rather than using 0.5 for everyone, you round to the nearest tenth. You round that decimal to the nearest tenth. That's what is included in the instructions that we previously went over. I said earlier there was some ambiguity here on the calculation method. If you look at the regulations, they're rounding to the nearest hundredth. You're probably going to end up with a similar result either way, but we'll see. Step 6. This is you're only going to do this when you're calculating your forgiveness period or whether you restored FTEs, and it can only help you if you can add to your FTE count during those periods. And that is, you look at the people who you offered to rehire or anyone who was fired for cause or voluntarily resigned or reduced less hours based off of their request. And you want to have documentation in all of these circumstances. So for anyone who meets those categories, you add to your FTE count so that it's not reduced for this change of them either rejecting an offer or working reduced hours or being followed for cause. And that's how you do an FTE calculation. Every time you're asked to calculate an FTE, this is the process that you need to do. And then once you do have that and you're figuring how FTEs are going to affect your calculation, you need to go through these 5 steps. So step 1 is you calculate FTEs for your forgiveness period and then the 2 base options that you have, January, February, or February through June of last year. Then you take the lowest number of these 2 base periods and you divide the forgiveness by that, and that's going to give you a percentage. If this percentage is 100 or greater, then stop. You don't have to do anything more, and you're not going to be limited by FTEs. But if it's less than 100%, you could be limited. That's when you need to test for safe harbors to see if one of those apply so that you can still get 100% forgiveness, or at least not reduce your forgiveness for FTEs. And to meet the first safe harbor, you need to first calculate your FTEs and the payroll that included February 15th. then you need to establish a decline. And the next period you calculate to establish that decline is from February 15th to April 26th. And if you did have a decline, then you meet the first part. Then you can get to the restoring FTEs part of the safe harbor. If you don't have that decline, though, then you have to stop. You're not going to meet at least this first safe harbor. But if you do have the decline, the next thing you would have to do is restore your FTEs back to your February 15th level prior to the end of this year now because of the extension with the Flexibility Act. So as long as you restore prior to December 31, if you met the first part, then you meet the safe harbor, you can stop, and you don't have to do anything else for FTEs. But if you did have a percentage in here less than 100 and you don't meet the safe harbor, the first one at least, then consider whether or not you're going to be able to qualify under this new certification based off of employee availability, which we discussed previously. This is word for word what's in the bill. Like we said before, monitor. I'm sure the SBA is going to put out more items on what exactly you have to certify for this. And then finally, if you did have less than 100%, you don't meet either of the two safe harbors, then you would actually reduce your forgiveness by the the percentage that's calculated up here times your cost that you actually spent on. So we want to encourage everyone to consider FTEs now and make sure you run the numbers. That way you're not surprised when you go to actually calculate and submit your application. Because again, we see this as the factor that could most negatively impact your forgiveness your loan forgiveness, even if you do expend all the funds. So we don't want any surprises here. So that is the last item on our bullet point. I wanted to mention the exhibits that you have. Exhibit A, the first interim final ruling on loan forgiveness. Then we have the text of the Flexibility Act. Exhibit B. Exhibit C, we have another good article by Tony Nitti that was in Forbes over the weekend. I would encourage you to read through that. He does a good job of simplifying things and making some good points about the program. And then finally, that joint statement issued yesterday by Secretary Mnuchin and the SBA administrator regarding, some things they're going to do to implement the Paycheck Protection Act, the amendments to it. So it alludes to guidance that's coming. So that concludes the information that I had to discuss with you all today. I know some of you may not be able to stay for the Q&A session. For those of you that do need to leave, again, thank you for joining us today. We're here to help you in any way, whether that be consulting or maybe running through some of these calculations or testing the calculations that you or your employees do. We want to encourage you to monitor future guidance that's going to be issued. As far as FAQs, the application for forgiveness is going to have to be amended now, and as well as the additional regulations to come. So again, thank you, and let's get into the Q&A session. It looks like we have about 15 minutes for our allotted time here. So first part of the Q&A, we have summarized some of the questions that were submitted up front. So I want to run through these really quick first, and then if we have time after that, we'll get into any ones that are new questions to be submitted. And then again, if we don't get to your question, just shoot us an email, and I'll get you an answer today or certainly by the end of the day tomorrow. So first question that we have to go over is a question. This is a good one. Our full-time hours are based off of a 36-hour work week. Will that hurt us? So the employees just work 36 hours regularly. and should we pay them an extra 4 hours to be in compliance? So the first thing I would evaluate in answering this question is the employees work 36 hours. Are they salaried though? Because if they have their salary and they're salaried employees, then you're probably going to figure them as one full FTE. However, if they're hourly, then that's when you would use the 36 hours paid. And will it hurt you? Well, it may or it may not, because if they work 36 hours in not only the forgiveness period, but the base periods, well, they're going to be the same before and after. So their FTEs are going to count the same in this fraction. It's going to be the same number. So it wouldn't necessarily hurt you. However, if they are hourly employees and FTEs would be a problem for you, then you do have the ability to boost those numbers by simply, paying them the extra 4 hours. So just something to consider when you're looking at FTE counts. Number 2 and 3, they're kind of tied together. Do long-term disability payments for employees and life insurance premiums for employees count as insurance? And my answer to that would appear that a disability payment or life payment would meet the definition of health insurance to be included in the calculation. Next one is SUTA, state unemployment, the only payroll tax that can be used for forgiveness. On the employee side, that answer is yes. If it's tax of your employees that you're just remitting to the government, like what you withheld for Social Security, Medicare, state income tax withholding, well, those are really wages. But on the employer side, yes, the only payroll tax that you can count are those state unemployment tax payments. The next one, we have a few questions here regarding retirement contributions. First, 2019 profit sharing contribution paid during the 8-week period. Can we count that towards forgiveness? This is a pretty common question. It's yet to be addressed in any FAQs. The only thing that we do have to go off of right now is that it says that a payroll cost, which is a payroll cost, that is paid during the 8-week period is eligible to be counted towards forgiveness. So until and unless the SBA further clarifies this, I would count that contribution, but we need to monitor, if that changes in any future FAQs or regulations issued by the SBA. Next question, we have a business where it looks like this is a physician practice, 4 employee owners, 9 employee owners, and asking about the retirement calculation. So we addressed the 2019 aspect of it, but now we're getting into retirement for owners. So my answer to this question would be different depending on the type of entity this practice is. So remember, if this entity is a corporation, then we treat the owner employees just like the regular employees. So all the retirement contributions would count. However, if this practice is a partnership, then we need to exclude our 4 physician owners and include the contributions for the non-owners. So a little bit different answer to this one depending on what type of entity we have. Number 7, I was told that retirement wouldn't be subject to the 100K per year limit. So, and this is correct. It still applies. When you're figuring the compensation limit, you look strictly at the compensation paid to the recipient, and the retirement and health insurance are on top of that. Lastly, is owner health insurance forgivable for the 8-week period, even if we don't cover all employees? I'm going to deduce from this question that the entity type here is probably not a corporation. And so I'm going to say it's probably a partnership, which would mean that all the health insurance would not qualify due to it being a partnership. Next question, number 9. Although the time period has been extended, is the number of reimbursable pay periods still 8 weeks, or have they been increased? The answer to that is if you choose to use the 24-week route, then you're going to have as many pay periods as are included in that 24 weeks. So you will have an increase in the number of reimbursable pay periods. What we don't know for sure, one of our items previously, is whether the cap per recipient is also going to be increased. Looking at the strict language of the bill, it would appear like it would be. However, we want to see that further clarified in future guidance that's going to come from the SBA. Number 10, was a reimbursement for PPE included in this amendment? This is one of the things that was floated out there initially. I think it was a good idea to include a business's purchase for protective equipment, masks, or barriers, as an expense that's eligible for forgiveness. However, that was not included in the bill. So as of right now, no, your purchases for PPE are not eligible for forgiveness. Maybe that'll be addressed in the future if we have another round of stimulus in the form of tax credits or something like that. But as of right now, it's not a forgivable expense. And then the last question that we have is, once the funds are used, how long do you have to submit the forgiveness application? So remember, it's 10 months after the last date of the covered period. And as of right now, your covered period is either going to be the 8 weeks after the funding of the loan or 24 weeks after funding of the loan. So depending on which one of those options you choose, your forgiveness is going to go, your deadline is going to be 10 months after that date. So these are all very good questions. Thanks to everyone who submitted those. That's what we have to answer so far. I'm going to throw this to my partner, Ricky Rumney. Ricky, do we have any other questions submitted right now?
I'm not sure if anyone's having problems submitting with the chat like they did the first 2 seminars, but we do not have any other questions that's coming through via chat. We did have one that was emailed to me in the middle, and I believe there's somebody that's raising their hands, and maybe we'll get to those. Maybe they can unmute and ask themselves. Let me give you this one that we received via email as the class was going on. It's referring to independent contractors, Schedule C. Does the modification of the loan forgiveness term from 8 to 24 weeks now allow me to use the entire 100% of the loan to pay myself and not be capped at the $15,385? I think they're referring to, obviously, like you mentioned, most of those loans, if they didn't have anything else or rent and similar things, they would have probably been around a $20,000 loan. So that was the question.
Right. Yeah, so that's one of the things we mentioned here, this third point, is that a lot of those applications, if they are using the prorated 24-week cap now, are going to be 100% forgiven. So it may be, but we need to see exactly what the SBA is going to do regarding this $15K 8-week proration here.